The idea of investing your money may seem daunting or impossible, especially if you don't have a lot of capital to invest. But I promise you don't need some $1 million inheritance in order to start investing. As you'll learn today, you can start making some legitimate investments with just $1,000. So let's take a look at 7 investment options that you have to start building your passive income today. Let's jump right into it. What is going on, everyone? Welcome back to my channel. If you're new here, be sure to subscribe and let me know what videos you want to see down in the comment section below. So one of the most common questions that I get from friends is, how much do you need in order to start investing? Now right here we have $10,000, and this is the amount that most people think they need for a legitimate investment portfolio, but that's completely wrong. Now, I'm not saying you're going to be raking in Ferrari money, but $1,000 is more than enough to start a legitimate investment portfolio that you can grow with over time. So the first thing I tell people to do who are looking to start investing is first paying off any high interest debt that they may have. Now, I know you may be sitting on your stack of $1,000 and you're eager to double your money investing in BitConnect, but any profits you make investing will be eliminated if you're paying any high interest debt. In my opinion, anything above 10% is high interest, since the stock market averages about 8% a year. This means that even if you made the perfect investment and made 8% with your $1,000, this would be more than eliminated if you had to pay 10% on $1,000 worth of debt. So you're better off using that money to pay off any high interest debt immediately before you start investing in any kind of market. For example, let's say you have $1,000 in credit card debt at a 25% interest rate. If you don't pay that off, then you'll pay $250 in interest for the year. So even if you had an 8% investment on that $1,000, you would only make $80, meaning that you would end the year with a negative $170 return. So if you currently have any high interest debt that surpasses a reasonable return that you could get with your money, then it is extremely important that you pay it off as soon as possible before you start investing in any of the markets. So now that you paid off all your debts, the next form of investment that I would recommend would be establishing an emergency fund. Now, I know that you're probably eager to get to the actual forms of investment, and I promise that is coming next, but it's also important that you have an established emergency fund so that you don't have to sell off your investments when emergencies happen in the future. Sure, you could take your $1,000 and put it in the stock market, but when your car breaks down and you have to pay the mechanic $1,000, you might have to sell your stocks for a loss in order to cover that abrupt cost. When investing, I always say that it's super important to have a long-term mentality, so you don't want to be forced to sell randomly just because you don't have an emergency fund. Most people recommend 3 to 6 months of all of your expenses, so once you have that much saved up in a high interest savings account, then you're ready to move on to actually investing your money. So the very first way that I invested my first $1,000 when I was a teenager was purchasing high dividend stocks. Now, if you're not familiar, a dividend is when a company shares a percentage of its earnings with you, since you are a small percentage owner of their company by purchasing their stock. For example, my favorite dividend stock is AT&T, since it has a dividend yield of 5.91%, which is very high. This means that for every $1,000 you invest in AT&T, you'll make a guaranteed $59.10 every single year that you own that stock. Now, I know that $59 is not going to change anyone's life, but this is an extremely consistent form of income that is 100% passive. These dividend rates vary drastically depending on the company, but owning a well-established company with a high dividend yield means that you'll have a fairly stable investment that also pays you a consistent dividend each and every year. Now, obviously, the price of the stock will still go up and down, and that's why it's so important to own a well-established company that has a very low chance of going out of business out of nowhere. Robinhood is by far my favorite platform for dividend investments, since their app is easy to use and it's completely free. It's perfect for new investors, so if you want to try out Robinhood and want a free stock, click the link in the description and you'll get a free stock valued at up to $250. So the next way to invest $1,000 is by purchasing an index fund. If you aren't familiar, an index fund is a grouping of various stocks or other investments that are pooled together under one umbrella. This means that by purchasing one index fund, you can instantly diversify your portfolio across hundreds or even thousands of different companies. For example, an S&P 500 index fund means that you own a small piece of the top 500 companies in the United States. The reason I like index funds over mutual funds is that the management fee is often extremely low, Plus, Warren Buffett, who's one of the best known investors in the world, recommends index funds, so if it's good enough for him, then it's good enough for me. And the best part is that some index funds also pay a dividend yield, meaning that you can diversify your portfolio across several companies while still earning a consistent form of passive income. If you really want to stack money quickly, then I would recommend reinvesting your dividends, which means when your quarterly dividend payment arrives, they will automatically reinvest that and use it to purchase more of that particular index fund. This additional share of index fund then earns you more dividends, which are used to purchase more index funds, and the cycle continues until you're rolling around town in your brand new Ferrari. I do want to mention that some index funds do have a minimum purchasing limit, which is why I started with individual dividend stocks when I was a teenager. But some have no limit at all, so shop around and find what index fund is best for you. This is not financial advice, nor are they affiliated with me personally, but I do own Vanguard index funds, so be sure to check them out since they are some of the best options out there. The next way to invest $1,000 is by putting it into a REIT, or a real estate investment trust. A REIT is a very similar structure to an index fund, but instead of buying companies, it focuses specifically on real estate properties. This means you're able to buy a small percentage of various properties in a certain real estate sector, and it's also a great way to diversify your portfolio even further. And the best part is that you can buy a REIT index fund that will also pay you a dividend. I know this may be getting a bit complicated, but this is essentially exactly what we talked about with normal index funds, but instead they buy various REITs in different real estate sectors, and they thank you for your investment by paying you a dividend, in addition to your investment hopefully appreciating over time. Now obviously you aren't going to get the great tax benefits of owning a property yourself, but a REIT is a great way to get started with real estate investing if it is a sector that you're interested in. This also means that you don't have any of the headaches associated with managing a property, but you can still dip your toe in the market without making a substantial $100,000 plus investment. So just imagine if you put $500 in an S&P 500 index fund and another $500 in a Vanguard REIT index fund. This means that for $1,000, you now own a very small piece of the top 500 companies in the United States, and can also call yourself a real estate investor owning a small piece of hospitals, retirement homes, and really any other form of real estate around the world. Now I know that all of this talk of index funds and real estate investment trusts is probably too much excitement, so we're going to bring it down a bit with the next form of investment, which is bonds. Bonds. Most people are familiar with bonds since they probably received it from a family member when they were like 5 and were told that they could cash out the bond on their 18th birthday. Without boring you to death, a bond is basically an investment in a state or government that sets the term of a loan and will pay you back with interest in exchange for you giving them that temporary loan. This means that all bonds have a maturity date that can be months, years, or in the case of the family member who gave you a bond 20 years ago, the maturity date can be decades. Since the terms of the loan are set from the beginning, bonds are one of the safest forms of investments, but are rather boring as a result and often yield a much lower return since the risk is significantly lower. But lucky for you, you can buy a bond index fund. You didn't really think I was gonna leave index funds in the dust like that. If you can't tell, I have a mild obsession with index funds since you can buy them in so many different forms. If you have little taste for risk but want a consistent form of investment, then a bond index fund is probably the best option for you. Vanguard has a total bond index fund that has consistently appreciated over the last 20 years, while also paying a dividend yield of 2.57%. The return that you will earn on a bond index fund will be much greater than if you purchased an individual bond yourself. This also means that your investment is much more liquid, meaning that if you need to sell, you won't need to wait 20 years for the bond to fully mature. Even with just $1,000, you could build a diversified portfolio with an S&P 500 index fund, a REIT, and a total bond index fund that would limit your risk and pay you a significant dividend on a consistent basis. Now, all of these options I mentioned are fantastic investments, especially as you start to accrue more capital. But with $1,000, I can't forget to mention the investment that earned much of my initial capital when I was younger, and that is flipping laptops. I know at first glance this may not seem like a flashy investment, but the return I was able to generate by buying and selling laptops is far beyond what any index fund could pay even over a 10-year period. I've had several laptop purchases that have yielded over a 100% return in a matter of hours. Let's say you purchased a $400 MacBook for cash that you found on Facebook Marketplace. You could then take great photos of that computer and list it online for its market value of $900. Even after paying fees and shipping, you would still take home $800, meaning that you doubled your initial investment of $400. This is a completely true story, and I've been able to generate this kind of return countless times through flipping laptops. If you want a step-by-step guide on how I'm able to generate several $1,000s every single month in profit, then check out my video on flipping laptops by clicking the link at the top of the screen right here. While this may not be as flashy as saying you own a real estate investment trust, the return can be substantial, and investing these profits back into an index fund can be a great way to start stacking money really quickly. Nearly all of the wealth that I accrued in my teens came from flipping laptops and investing the profits back into high dividend index funds. Very quickly, I began to earn more passive income than I was making scooping Italian ice at Rita's while in high school. It's all about consistency and patience, and I promise as soon as you make that first dollar in passive income, you'll become completely hooked on the idea of making money while you sleep. So clearly it is possible to start investing with just $1,000. Let me know in the comments section if there are any investments that you think I forgot, and of course, let me know if you have any questions at all. Don't forget to click the link in the description if you want to get a free stock from Robinhood and start building your passive dividend portfolio today. And subscribe if you want to see more videos like this in the future. As always, thank you so much for your time. Take it easy, and I'll see you in the next one.